Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Wednesday, Hump Day. Hope you all have a good midweek so far. Let's jump into it. It's October 19th here, and we do got some big news today, so we'll jump right into it. We got starting off with the CPI, Consumer Price Index. This is the gauge that we all look at for inflation, and for August, we had a zero point 0.4, which was kind of high for August, and we figured it would drop a little bit. And well, it did drop a little bit. That's the headline number right there. So let's strip out the food and energy and the volatility from that and see what we got here. So that's called the core CPI. And again, August was about zero point 0.2. We figured it would remain about the same and actually dropped a little bit. So that's good news. This basically tells us that inflation is under control. It's tame. Gives us a year over year approximately about 2% within the range that the Fed likes to keep us. So that's good news on the inflationary side. Housing starts. We had 572,000 the previous month, and we figured it would be a slight uptick, about 590,000, and it jumped up to 658. So good news right there. Again, still out from where we need to be at, but again, good news that they're, again, from the, you recall yesterday we saw the builders index, home builders index, showing that they were feeling a little bit more optimistic, so it came in a little bit higher. So this kind of shows that they are going to create more. They're going to build more. So excuse me. The bad news is that most of that building is actually multi-family units versus single family. So it looks like they're leaning towards obviously rent more rentals in the near future. So that's the negative side of things. Where that comes. So we got single family permits. We had a 418,000 and basically came in about roughly 417. So we had no estimates on there. We just it came in slightly lower than the previous months. Later today, 11 o'clock Pacific Coast Standard Time, we're going to have the Fed Beige Book. This is going to kind of talk about where the Fed's insights of where things are at and such. And that could have a big market mover later on today. So things are kind of playing out a little bit. If you look at the go headline news here, and stock market's a little mixed. So they like to, obviously the inflation's tame, housing starts are pretty good, but they're kind of looking and waiting for the Fed Beige Book. That's going to be a definite market mover about 11 o'clock our time, Pacific Coast Standard Time here in California. Uh, what will be the factor there? So let's go ahead and take a look, see where bond market is today. As we can see, we're up today right now. We start off lower, about 19 basis points lower from where we left off yesterday. As you see, we had a star here where it could go quite either way. We kind of bounced off these ceilings here. We almost touched the floors here, and basically settled about negative 3 basis points from where we left off the previous day. Now we start off at the floor here, and now we're bouncing upwards. And again, this could greatly change. It could go opposite direction after the Fed Beige Book. It could go greatly upwards. We're still below the 10-day moving average here. We'd like to see that obviously get above the 10-day moving average and hopefully get closer to the 102 level here. And things could quickly change here. So stay tuned, and I got a little surprise for you, especially if you are somebody who needs to repair your credit. We got a free webinar for you to give you some tips on how you can improve your credit. So stay tuned.